Hello friends, welcome to Business Hologram YouTube channel. Today we will be reviewing the company ADC India Communications Ltd. First, let's get into the company overview part. So ADC India Communications Ltd is a prominent provider of network infrastructure solutions specializing in copper and fiber physical connectivity for telecommunications and data networking. So its headquarters is in Bangalore, India. It operates an ISO 9001 certified facility in Pena in Bangalore. Its core focus is providing end-to-end connectivity solutions, which includes copper, fiber, and broadcast for telecommunications service providers and enterprise networks. Its key segments include telecommunication, which includes the manufacturing and trading of telecom products. Next is IT networking solutions for enterprise networks, including structured cabling and data center solutions. So if we go to the stock details of the company, we can see that the current stock price of the company is 2025 rupees, and the market capitalization is approximately 931 crores, which falls into the small cap segment. And if you look at the 52-week range of stock price, the highest price reached is 2090, and the lowest price touch is 963 rupees. So currently the stock price is at a higher side when we compare with the 52-week range stock price of the company. Next, let's analyze the financial performance of the company over the last 4 quarters. So, as you can see in the screen, we have listed some parameters for the last 4 quarters, like total revenue, operating profit, net profit, operating margin, earnings per share. All these values for the last 4 quarters can be seen from the screen. Key insights that we get from the data is first is sequential growth. In the most recent quarter, that is the Q3 FY26, net profit jumped by 42.23% compared to the previous 3-month period. Next insight is year-on-year growth. Revenue for Q3 FY26 increased by 17.15% compared to the same period in the previous year. Next is the segment strength. The IT networking segment remains the primary driver, contributing roughly 43.69 crore to the Q3 revenue, significantly outpacing the telecommunication segment. Next point or next key insight that we get from the data is profitability recovery. After a dip in the operating margin to 6% in March 2025, the company has successfully rebounded, maintaining double-digit margins throughout the current fiscal year. Now let's look at some of the strategic initiatives of the company. ADC India Communications is currently undergoing a significant strategic transition, primarily driven by a change in its global parentage and the expansion of India's digital infrastructure. So the first strategic initiative that we are looking at is strategic change of control. That is the Amphenol factor. A major strategic shift occurred in early 2026 following Amphenol Corporation's acquisition of CommScope's connectivity solutions business, which owned ADC. Amphenol launched an open offer in April 2024 to acquire up to 26% of the public shareholding of ADC India. The transition under Amphenol, a global leader in interconnection systems, is expected to provide ADC India with better access to global supply chains and advanced technology in high growth areas like specialized sensors and high speed connectors. So overall, the synergy, it will contribute to the synergy factor. Next strategic initiative that we are discussing is focus on data center infrastructure. The company has realigned its product roadmap to capitalize on the massive boom in Indian data centers. So first is high density solutions, implementing fiber plug and play and optical distribution frames. That is the ODF designed for Tier 4 data centers, which require 99.995% uptime. Next is zero-bit error guarantee, pushing high-performance 10G augmented category 6 solutions with unique performance warranties to attract mission-critical enterprise clients. So these are the two areas they are focusing with respect to the focus on focus on data center infrastructure. The third strategic initiative that we are discussing is support for 5G and digital transformation. ADC is positioning itself as a knowledge economy enabler by supporting the physical layer of 5G rollouts in India. So some of the points to consider under this initiative is end-to-end connectivity. Beyond just selling hardware, the strategy involves providing integrated copper plus fiber solutions for telecommunication service providers migrating to next-gen high-speed broadband. Next is engaging with enterprises for LAN modernization, moving away from the traditional cabling to more efficient managed fiber architectures. Okay, so next strategic initiative that we are discussing is financial resilience and capital allocation. Unlike many small cap infrastructure firms, ADC strategy includes a debt-free growth model. The company maintains a zero debt balance sheet using internal accruals to fund manufacturing upgrades at its Peña Bangalore plant. A consistent focus on dividends remains a core part of its strategy to retain investor confidence during its parentage transition. So the last point, the last strategy initiative that we are discussing is localization and CSR integration. So first focus is local manufacturing, strengthening its ISO certified manufacturing facility in Bangalore to align with Make in India incentives. Next part is the community focus. Its strategic CSR focus areas for 2025 to 2030 are centered on education and health, with a committed annual spend to maintain its local social license to operate. Now let's analyze the ownership structure of the company. As you can see in the screen, promoters hold 72% of the shares, public shareholders hold 27%, foreign institutional investors 0.12%, and and domestic institutional investors 0.03%. Key insights that we get from the data include, of course, first one is promoter dominance. The company is primarily owned by foreign entities under the Amphenol Corporation umbrella. As of March 2026 filings, the promoter group's holding remained steady at 72%. The major individual promoter entities are CommScope Connectivity LLC, which holds 67.49%, and CommScope Technology LLC, which holds 4.54% of the shares, which are now part of Amphenol. A significant positive development occurred in January 9, 2026, when the promoters released all existing encumbrances on their shares. As of May 2026, a monitoring period, the promoter holding is 100% unpledged. Next key insights that we can get from the data is the Amphenol open offer. In April 2026, Amphenol Corporation conducted an open offer to acquire an additional 26% stake from public shareholders at a price of 1,233.59 rupees per share. However, because the current market price is over 2000, is significantly higher than the quoted price, than the offer price, the open offer saw minimal response from public shareholders, leaving the ownership structure largely unchanged. Next key insight is retail public presence. Roughly 27.83% of the company is held by the public, with a small fraction held by high net worth individuals and the vast majority by retail investors holding capital up to 2 lakhs. If we look at the institutional interest, we can see that the institutional participation remains very low for a company of this valuation, with FIIs and DIs combined holding less than 0.2% of the total equity. This suggests the stock is currently driven primarily by promoter stability and retail sentiment. Now let's move to the financial ratio analysis part, which is a very important segment. Firstly, we will begin with the profitability ratios. As you can see in the screen, we have listed some of the profitability ratios. So let's analyze each one. First is operating profit margin. The value of the company stands at 17.5%, where the industry average is 15%. So its position is it maintains a good position in this aspect. Next is net profit margin. The value of the company is 12.2%, where the industry average is 10. In this aspect also, the company is maintaining a good position. Next is return on equity. The company's value stands at 21.8, where the industry average is 18. So this is also a strong parameter for the company. And next is return on capital employed, ROCE. Company's value stands at 19.3, where the industry average is 16. So it's maintaining a good position. Return on assets, also the company's value stands at 9.5, where the industry average is 8. So that is also company is exhibiting a strong performance in that aspect also. So we can clearly say that when it comes to profitability ratios, the company is at a very dominant position. Now let's look at the leverage ratios. First ratio is debt to equity ratio. The company maintains a nil value in this parameter, where the industry average is 0.15 to 0.45. So that is an excellent value maintained by the company. Next is interest coverage ratio. The company's value stands at 1801, where the industry average is 428. Also, in this case also it is maintaining a very superior position. Now let's look at the valuation ratios of the company. The company's valuation metrics are currently in the high premium zone across the board, while the return on capital employed at 31% and zero debt status justify a higher than average multiple. The current levels suggest the stock is priced for a perfect growth scenario. So let's see some of the key valuation ratios. First is price to sales. The value of the company stands at 4.88, where the industry average is 2.1. So it's at a high premium. It's selling at a high premium. The PE ratio stands at 50.7, where the industry average is 31.5. So in this case also it is the share price is selling at a premium rate, or it is overvalued. The price to book value stands at 12.1, where the industry average is 4.2. So in this aspect also it is at a high premium. Now let's do a quick SWOT analysis of the company. First we will begin with the strengths of the company. So first point under strengths that we consider is fortress balance sheet. The company remains 100% debt free with substantial cash reserves, providing immense financial flexibility for future expansion. Next strength is superior return metrics. An average ROC of 31% and ROE of 24% are nearly triple the industry average, signaling high efficient capital management. Next strength is global parentage of Amphenol. Now backed by Amphenol, which is a global leader in interconnection systems, ADC gains access to advanced technology, global supply chains, and stronger R&D pipeline. Next strength the company possesses is operating leverage. A high degree of operating leverage allows small increases in sales to translate into disproportionately high net profits. Now let's look at some of the weaknesses encountered by the company. First point is revenue concentration. The core business is highly dependent on a few segments, that is IT, networking and telecom, which is vulnerable to the capital expenditure cycles of a small group of large Indian telcos. Next point is micro cap scale. Despite high margins, the company lacks the massive scale of larger competitors, which can limit its ability to bid for mega scale infrastructure projects. Next point is declining near term profits. Recent 9-month profit after tax figures showed a 28% decline year on year, indicating the operational headwinds despite a surging stock price. Next point is stretched valuation. Trading at a price to book value ratio of 12x and PE of 50x, the stock is classified as very expensive by market analysts, leaving little room for error in earnings. Now let's look at some of the opportunities in front of the company. First point is 5G and data center boom. The rapid expansion of 5G networks and tier 4 data centers in India creates direct demand for ADCs, fiber plug and play and high density connectivity solutions. Next opportunity point that we are considering is synergy with Amphenol. Potential to localize Amphenol's global product line for the Make in India market, expanding their current product basket beyond traditional copper and fiber cabling. Next point is asset light expansion. With significant cash on hand, ADC can pursue inorganic growth or technology upgrades at its Bangalore facility without taking on debt. Now let's look at some of the probable threats in front of the company. First point that we are considering is intense competition. faces constant price pressure from both large-scale global players and low-cost unorganized manufacturers in the commoditized segments of the cabling market. Next point is valuation correction risk. The stock has surged 44% in the last month. If the upcoming May 21 board results show stagnant growth, the stock is highly vulnerable to a sharp correction due to its premium multiples. So the next threat point that we are considering is technological obsolescence. Rapid shifts in networking standards require continuous R&D. Any delay in adapting to new high-speed data transmission technologies could result in market share loss. So friends, that was a quick review of the company ADC India Communications Limited. If you have found the video useful, please like, subscribe, share, comment and support. Thank you.